The brief imposition of martial law has triggered concerns over increasing volatility in the financial markets, prompting various efforts to maintain investor confidence. Our correspondent Lee Soo-jin joins us here to take a closer look at the economic implications. Soo-jin, first, how are the markets faring?
Right, so following the passing of the second impeachment vote, South Korea's financial markets have shown signs that they have entered stable territory. So previously, a sharp drop was seen in domestic stock markets in the days after President Yoon's unexpected declaration of martial law and its swift reversal. But this Monday, after the second impeachment vote on Saturday, the Kospi opened up, moving past the 2,500 mark and continued climbing before gradually stabilizing. Although it closed down on Monday, on Wednesday, the benchmark index closed up more than 1% thanks to foreign investors turning to net buyers for the first time since the initial impeachment attempt. Here's how one expert is evaluating the stock market.
When it comes to the stock market, as long as it doesn't drop significantly beyond the 2,500-point range, a certain level of stability can be maintained.
The Korean currency, however, has been slightly more volatile, closing past the 1,410 to the dollar mark the day after the brief imposition of martial law. And it surpassed the 1,430 mark after the first failed impeachment attempt and has remained in that range even after the second impeachment motion passed. However, according to the expert, the fluctuations in the exchange rate are not severe enough to warrant extreme concern.
The Korean won has weakened to around 1,400 against the US dollar, which is around what it was during the 1997 Asian financial crisis and the 2008 global financial crisis. But the factors behind are different, so as long as it doesn't surpass the 1,450 mark, you can say it's stable.
He also emphasized the importance of the government's role in building confidence in the country's economic system.
And how has the government been reassuring foreign and domestic investors?
So he's been working full-time to make sure that the political turmoil doesn't impact the economy. So what the finance ministry has done is that it has convened numerous meetings during the past couple of weeks with related institutions and kind of showed that they are committed to economic stability and growth. And just like the expert said, building credibility has been key. Let's take a listen to what Choi Sang-mok, South Korea's finance minister, said during a rare joint press conference for foreign media held on Wednesday.
Given ongoing market volatility due to domestic and external uncertainties, the government will work with all sectors to stabilize the economy, prioritizing external credibility.
To do so, the government will continue to operate a 24-hour monitoring system for financial markets and boost incentives for foreign investments. He also said that the finance and foreign ministries will continue to work closely and regularly hold joint meetings to not only develop comprehensive economic strategies, but also to ensure a coordinated response to economic challenges. The government will also move to include the private sector in ministerial-level meetings aimed at enhancing industrial competitiveness. And lastly, the government will ensure that the 2025 budget will be executed starting the first day of the new year, and that supplementary budget will also be devised for vulnerable groups to further stabilize people's livelihoods.
And what's being done to target market fluctuations?
Right, so this is actually really important because when we look at the overall trend, we can tell that the stock and currency shows that the market turbulence has somewhat eased, but uncertainties do remain. With the Korean won falling to its lowest level since the 2008 global financial crisis following the Fed's interest rate cut decision, the central bank and the Ministry of Finance announced that the upper limit of foreign exchange swap line, which is basically the amount that the National Pension Service can borrow from the Bank of Korea's foreign exchange reserves for overseas investment, has been expanded to $65 billion from the current $50 billion. And here's what else could be effective according to another expert.
I really urge the Bank of Korea should not only supply the money, but also they should reduce the interest rate. All other countries they try to reduce the interest rate and foster the growth rate of the GDP growth rate in the economy.
Our economic correspondent, Lee Soo-jin, thank you.
Thank you for having me.